Welcome to the deep dive. We're here to cut through the noise and get straight to the crucial insights. And today we're tackling something that feels, well, almost like a financial riddle, doesn't it? The big surge in gold's value. And this growing chatter about the U.S. possibly revaluing its gold reserves. So our mission today, let's unpack why gold's suddenly so prominent again. What does revaluing actually mean for a country? And, what could it signal for the future of money? We're digging into some sharp analysis from the Gold IRA Company's bulletin, and you'll see this right away. There's this huge, frankly stunning gap between the official value of U.S. gold and what it's actually worth on the market today. What does that gap really mean? Let's find out. Okay, so to really get our heads around this potential revaluation, we need to look at this paradox first. America's got this massive treasure locked away, but officially, it's valued at, well, practically nothing compared to its real worth. The U.S. holds about 8,133 tons of gold. That's what, 260 million troy ounces?
Roughly, yes. And that number's been pretty stable since 2024. It's the largest official stash anywhere in the world.
Right, but here's where it gets, like, truly wild. The official book value, what the Treasury says it's worth, is around $11 billion.
11 billion.
Yeah, which works out to only about $42.22 per ounce. It's based on, what, rules from the 70s?
Actually, the funny $2.22 figure dates back to an accounting change in 1973 after the final break from gold convertibility. It's really a historical artifact.
Okay, historical artifact. But then you look at gold's market price in 2025, it's flying high, over $3,400 an ounce.
Exactly. So there's this enormous unrealized value just sitting there on the government's books.
It really is like having a priceless painting valued at what you paid for it 50 years ago. This huge asset, officially worth, well, not much.
That's a great way to put it. And, the reason why it's valued like that goes way back. It's rooted in the old gold standard days, Bretton Woods.
Yeah.
Times when the dollar's value was directly tied to a fixed gold price. That history is absolutely crucial for understanding why things are the way they are now. Think about the 1934 Gold Reserve Act. That was huge.
Right. Didn't that change the price significantly?
Dramatically. It hiked the official price from $20.67 up to $35 an ounce.
Wow.
And that wasn't just numbers on a page. It had a massive real-world impact. It basically allowed for a huge expansion of the money supply during the Great Depression. It gave the government and the Fed more ammunition.
Mm-hmm.
And another key part, people had to turn in their gold at the old lower price.
Ah, right. So it consolidated gold in government hands.
Exactly. Consolidated reserves, transferred wealth to the public sector, all to fight the Depression. And that history, that precedent of using the gold price as a policy lever, that's right at the heart of today's conversation. It shows it could be a tool for stabilization, for crisis management.
Okay, so that historical context is really illuminating. But how much of what's happening now is just history repeating itself? And how much is driven by totally new things, like the BRICS countries actively trying to, de-dollarize? Let's look at the global picture now because it feels like things are really shifting.
That's a really important question. History gives us a template, maybe, but today's dynamics are different. The BRICS nations, Brazil, Russia, India, China, South Africa, they aren't just talking, they're building. They're setting up alternative payment systems, doing more trade in their own currencies.
And using gold.
And definitely using gold.
Yeah.
They see it as a way to backstop against dollar ups and downs, a path to, let's say, monetary independence. Look at Russia launching its own gold exchange to challenge Western pricing. Or China. They're buying up gold aggressively. It's strategic.
It sounds like a direct challenge, yeah.
It is. It's about shifting the balance away from Western financial dominance.
And it's not just BRICS, is it? We're seeing central banks all over the world piling into gold, especially in emerging markets, maybe more so than in, say, Europe or the U.S. It looks like diversification.
Absolutely. It's a clear trend. And here's a striking fact. As of mid-2025, gold has actually overtaken the euro.
Overtaking the euro as what?
As the world's second largest reserve asset held by central banks, it's now about 19% of global foreign reserves.
Wow. Okay. That's significant.
It really is. It underscores gold's enduring role as, the ultimate safe haven when things get uncertain, inflation, geopolitical tension, you name it. Governments are buying it as a strategic anchor.
Okay, so we have the history, the global shifts, the central bank buying. It all leads back to this big question for the U.S. What is a gold revaluation, practically speaking? Let's just define it simply first.
Okay, simply put, it's just changing the official price tag on the gold the government holds.
Yeah.
Adjusting that old $42 figure to something much closer to today's market price.
Right, changing the number on the books.
Yes, but the effect could be huge. Suddenly, the notional value of those U.S. reserves skyrockets. This could make the government's balance sheet look much stronger, potentially giving it more flexibility in monetary policy, all without actually increasing the national debt.
Okay, so it's like finding hidden value on your own balance sheet.
Pretty much, yeah. And why might the U.S. even think about doing this? Well, there are a few potential reasons. One, the massive national debt. Revaluing gold could make the government's capital reserves look much bigger, maybe easing some pressure there. Two, fears about inflation or maybe declining confidence in the dollar. Gold could act as a stronger backstop.
Right.
And three, it could be a strategic signal, a response to what BRICS and others are doing, showing the U.S. still has powerful options in this changing world order. Basically, it could allow the U.S. to, say, inject liquidity or shore up its finances without issuing more debt or raising taxes.
And the numbers we're talking about are just staggering, aren't they? If they revalued near the current market price, say $3,400,
Or even higher, potentially.
that $11 billion book value could jump to over $1 trillion.
Easily. Maybe significantly more, depending on the price they chose. It's a massive potential shift in perceived wealth.
$1 trillion just appearing on the books.
And that brings us right back to 1934, doesn't it?
How so?
Well, back then, revaluation let the government unlock gold's value to help the economy. Potential revaluation today could function similarly, maybe, but on a vastly bigger scale. It could impact the Fed's toolkit, offer huge fiscal breathing room. It's potentially transformative.
Okay, transformative, but surely there are risks too. Something this monumental can't be all upside.
No, absolutely not. There are definite risks to consider.
Like inflation.
That's a big one. Pumping potentially trillions of notional value onto the books could fuel inflation down the line. Usually there's a lag, maybe several months, but it's a real concern. Well, confidence. What does it do to people's trust in regular fiat currency, in the dollar? If the government suddenly emphasizes gold this much, could it inadvertently weaken faith in the everyday money we use? That's a risk of currency debasement.
And how would the public react? It could be unpredictable.
Very unpredictable. Managing the timing, the messaging, that would be incredibly tricky to avoid market shocks or public confusion. And then, there are these more historical, maybe fringe concerns about, well, scenarios like the Great Taking.
The Great Taking, what's that?
It refers to historical instances or theories about potential future ones, where governments might move to consolidate gold, even privately held gold, before implementing inflationary policies. It touches on fears about state control versus private monetary freedom. While it's a debated idea, it highlights why some people see physical gold as a hedge, not just an investment.
Right, a hedge against uncertainty, maybe even government action.
Exactly. Less speculation, more fundamental monetary safeguard.
And all this is happening against a backdrop of, well, a pretty turbulent world, isn't it? We've got conflicts, energy market shocks, trade tensions. It feels like a bigger struggle is playing out.
Definitely. Ukraine, the Middle East.
Yeah.
These conflicts ripple through everything: energy, trade, financial stability, and underneath you see this tension between the current sort of U.S.-led global order and these emerging blocs like BRICS, pushing for a more multipolar financial system.
A global chessboard, as you said.
It really is. And interestingly, all this instability, it tends to make gold look more attractive as a safe haven. Looking out towards, say, the end of the decade, some analysts think we might be heading for a major crisis or some kind of financial reset.
A reset.
Yeah, potentially a shift away from systems built purely on debt towards models maybe incorporating commodities, equity, with gold playing a key role symbolically and practically. We could be seeing the early stages now.
So bringing this all back home, what does this mean for you, the listener? It sounds like we need to separate how governments see gold versus how an individual might, right?
That's absolutely crucial. Governments and central banks hold gold as a reserve asset. It's about credibility, stability, having options in a crisis, backing the currency system. They aren't primarily chasing capital gains like an investor might.
Okay, so it's foundational for them.
Foundational stability, exactly. Not speculative profit.
So for our listeners, the advice isn't necessarily run out and buy gold, but more about understanding these bigger dynamics.
Precisely. It's about monitoring the key indicators. Keep an eye on what central banks are doing, watch gold reserve trends, follow the geopolitical shifts. Understanding these forces helps you grasp the evolving monetary landscape without necessarily making impulsive investment decisions. Knowledge is the key here.
Right, stay informed.
And if you want to dig deeper, there's some great, reliable resources out there. The World Gold Council is excellent. The Federal Reserve website itself. Check out data providers like CEIC Data or Trading Economics 2. They offer solid data and analysis.
Good resources. Okay, so let's try and wrap this up. The main takeaway seems to be this big jump in gold's price, plus all the global shifts, has brought the idea of a U.S. gold revaluation back onto the table in a serious way. And it's not just some obscure accounting issue. It could have really profound effects on money and finance.
That's it exactly. We don't know if or when it might happen or how big it might be.
Yeah.
But the potential for it to reshape the U.S. monetary system is huge. So watching these developments closely with the facts is really vital to understand where global finance might be heading. It's definitely a story that's still unfolding.
Absolutely. So here's a final thought to leave you with. In this world of shifting power and economic unknowns, how might gold's role keep changing? And maybe, what other assets could possibly emerge as the ultimate safe havens in the years and decades ahead? Something to think about.